What do you expect in the day ahead? We're mentioning, the rising bond yields, the long bond almost at 5%, the 10-year at 4.8%. What are you expecting today?
Yeah, well, I think it's all about yield. So really what we're looking for to see some stability. The other thing for the market, we're approaching that 200-day moving average on the S&P. We're at 42.29 on the S&P. That 200-day moving average is around 4,200. So really what you're looking for is just to see if we have a little bit of a movement from fear to a little bit of greed, that people are looking at this pullback for some opportunities.
So you're saying if we go from fear to greed, does that mean you see this potentially as a buying opportunity? And if so, are there certain sectors you would buy in right now?
Yeah, the way we're thinking about this, Frank, we've been more, at least since end of July, we've been expecting more of a correction in price and time, and we've gotten both of that. I don't know that we've seen the low yet. I mean, in some ways, I'd actually like us to crack below that 200-day moving average to get a lot more fear. But the good news is we would be leaning in. And if you underweight equities relative to long-term targets, what we wrote last night is that we would lean in and look at this as an opportunity, because you've seen prices pull back pretty good. And more specific to your question, as far as where we would focus, two sectors I would highlight would be communication services. We've had a nice move back there, where a lot of AI plays, and also the energy sector as well.
All right, so that's what you wrote last night. Let's look ahead to the day today, again, with the futures for the Dow just moving into positive territory. The S&P kind of flat, but just slightly higher right now. With all that in mind, what is your WEX word of the day?
All right, Frank, the word of the day today is reset. We've had a really large reset across this markets, as far as it's all about the 10-year. So 10-year has moved up very quickly, and because of that, risk-free rate has moved up and reset higher. We've seen a broad-based reset across markets. We can look at the S&P being down about 8%, but small caps are down 15. The average stock is down double digits. Utilities and real estate are down 20. So we've seen a pretty good reset. And the other thing I will say, the reason why we're starting to get actually a bit more positive on a short-term basis is the percentage of stocks in the S&P 500 is now the most oversold since last fall, after being very overbought in July.
All right, so Keith, you gave us a sense of what you would buy into. Are there certain sectors you would just completely stay away from?
Well, we would still stay away from the real estate sector, as an example. Even though it's down 20%, we've been underweight all year. We think that's really interest rate sensitive. And even with small caps, we like small caps longer term, but they have a lot more floating rate debt. So these higher rates for longer impact them. So we would really continue to focus on the larger cap part of the market, and some of the sectors I mentioned before, like energy and communications, where we see better relative value and momentum.
All right, back to real estate. We were just showing the chart just a moment ago, down more than 11% year to date. So you're saying that you would stay away from buying right now. Would you also trim that position right now? Would you just cut the losses when it comes to that sector with the current bond and rate situation?
Yeah, that's a harder question, because we've been underweight, telling people to avoid this. Now you're down 20% from the highs in a short period of time. So, if I was in it today, I'd be looking for an opportunity to reduce it on any type of, kind of mean reversion bounce in the market.